All right, welcome back to FreightWaves Today. It is a time for Sonar. We're going to break down the data for you, what we're seeing in the market, because this is what we do here at FreightWaves. All of the data that you're seeing is available on Sonar for subscribers. A lot of ways to get that. There's a core Sonar platform, gosonar.com.
Yes.
But you can also get our mobile app. If you're a driver and you're trying to figure out what's happening, you could download the mobile app right on the iOS store. It's Sonar Blue to Blue. We also have something called Market Monitor. Market Monitor is for the executive level summaries of what's happening in the market. And then if you're quoting loads and you want a second source, you want to check, just quote unquote spot check your own activity, you can get our quick rates product. So all of those are different options.
Yep.
I think every
They're all
executive should
other than
have
the enterprise package.
the Market Monitor. Go ahead.
They're all self-serve other than the enterprise package. So really quick and easy to just sign up on your own, put in a credit card, do a monthly subscription or an annual subscription. You can see all of those at gosonar.com/packages to compare the different options.
Yeah, so it's great. Look, every executive should know what's happening. The data's right there on GoSonar. Like, you should have it. This is your industry, people.
Yeah, and it also has news and research.
It is. The research is amazing.
Great.
So we've covered everything from GLP-1s. We've covered the industrial build-out, the AI data centers, what happened with fuel, covered all of the earnings roundup. It's about time to publish that one again.
It is, yeah. I was waiting on 2 or 3 more, but we might go ahead and push it out in just a minute.
We do it every quarter. We go through 72 companies. We highlight and rank them based on bullish to bearish. Last time it was Prologis was the most bullish, the big warehouse operator, and the most bearish was Wabash Trailer. So we're going to see how they stack up. I'm sure you've tracked it.
I mean, we're going to have to talk about railroads and
the railroads are
performing.
Bullish, right? That's great.
All right, but today I thought we would start by talking about an index that we haven't talked about much. This is our Sonar Truckload lead time index.
So let's just before we go into that, let's describe what this is. So lead time, Sonar tender lead time, is how far in advance a tender happens before the load picks up. So it's looking at appointment date and time and determining in advance. So if I send something 4 days in advance, it's a 4-day lead tender time. If it's 1 day in advance, it's a 1-day tender lead time. It's looking at the record and request for when that load will pick up. And we've been tracking this stuff for years. A lot of times it's not that interesting to me. I don't refer to the data that often unless there's a major change. We're going to make it
interesting today, though.
But I want to go in and talk about what is happening here, Julie.
So what's happening now is that we're seeing that we're at this 3.71 days for tender.
Oh, sorry. I am. You've set this up.
Yes. For today, currently. This is seasonality. So we're in August.
Yes.
And really what we've seen is over the last 6 years that we've been tracking it, tender lead times have continued to get longer. Now, of course, there are longer.
That's the holidays.
That's the holidays. You pre-ship, right? Like people push stuff off the dock before the end of the year, before the holidays. They're getting stuff out and getting their loads tendered. But what we can see is for this time of year, when there's usually seasonality where there's not as much lead time, we're seeing more of it.
So what's interesting is
there's 2 reasons.
So you had, you basically had the whole sort of end of July drop off in August and bottoming. But this year it's got a little bit of went up a little bit in the month of July, but not really a significant. End of month always has some
didn't come down as much as that
didn't come down. It stayed high, stayed elevated. What's going on there?
So I think there's 2 reasons. I think that one, I think supply chains are getting more sophisticated. People are getting better at forecasting and can do lead times further out. 2, I think shippers are beginning to retender at new contract rates. Contract loads generally have more lead time than spot. Obviously, the more rejections there are, the closer you're getting to the actual pickup date by the time a carrier accepts it. And then I think 3rd, people are not in a rush for their inventory. So they're going ahead and tendering that. And we're seeing that with the more elongated peak as well as intermodal conversions.
We've heard multiple guests have talked about the fact that peak season or the movement of product towards peak is happening earlier this year. Shippers are planning because they know just capacity's been tight. They're planning more time. The other thing that may be happening is the fact that if I know that capacity is tightening and I know that I've been getting a lot more rejections and carriers are reconfiguring their network, I would rather send those loads a day in advance or 2 days in advance, get the rejections and then plan on number 2 and number 3 and number 4. And what you can see right now, if we look at it, we're at 3.71 days. These are days in advance. They're actual calendar days, not business days. And so
And that's just through August, right? So when you see any of those other numbers being higher, that's because at the end of the
holidays,
year, it's a lot
you have Thanksgiving is always a couple of days in advance. You have Christmas and New Year's always a little bit in advance. Right here, Labor Day is a bit in advance. So you do see holidays drive it, but what's interesting is just the fact that if you go back where we were just a couple of years ago, I mean, last year we were hovering at about, what is that, 3.5, now we're at 3.71. But if you go back to 2024 and 24 and 23, you were, I mean, look down here, you were as low as 3.25 days.
Yeah, and when you average out the last 3 years, with last year being longer lead times, we're still up, from an average of 3.65 up to this point in the year to 3.7.
These are tenders that tend to be contracted freight or freight that's in your relationship freight. So you could get some spot opportunities, but it's still the relationships you've already established, not stuff that is typically just going to on a load board type stuff.
Yeah. And I think that I wanted to also show the maps, and I wanted to just pull out a specific region to really kind of talk through this concept. So this is the tender lead time for St. Louis. So you can see it's at 3.42 days, just a little under.
Look at 7.53 out in West Texas.
Yes. So you can see St. Louis. It's a little under the average, pretty close to the average.
That's that whole oil patch. That's all of the oil, so you're pumping.
So longer.
You get a lot of lead time. It's Amarillo, Lubbock, Odessa, Abilene. Look at right here, Cheyenne. Is that sort of like eastern Wyoming, Nebraska? I guess it's Nebraska right there, right? Like
yes, because Lincoln, Nebraska.
So that's sort of like Wyoming, Nebraska. Some longer lead time. It's a lot of mining out there. Mining probably very much like oil, kind of like creates longer lead times.
Yeah, but I wanted to compare the lead times in a specific market to the actual tender rejection index too, because it very often is a indicator, right? So those lead times in St. Louis we saw were a little bit below average. They're shorter lead times than we're seeing in other parts of the country, which makes perfect sense because tender rejections out of St. Louis are higher than most of the country. They're at 27.6%. We know the national average is more than that, 13.5%. So it makes perfect sense. One is in many cases sort of a precursor of the other. Where it gets interesting is when tender rejections, volumes, spot rates, and lead times don't always align. And I think that that's a really, really cool thing to do, to use these lead times to really give more context to what you're looking at. So I dug into Atlanta for just for the most recent past 3 months, and then we'll look at just 2 weeks. So you can see that tender rejections are up a bit over the last 7 days. When you average last week, the prior week, and then average last week, they're actually not up. They're down a little bit. They're when you look at 2 weeks, they're down a bit. Moderately tight market, strong tightening. However, spot rates are not going up in this case at all. Tender volumes are going up. So this gives you really good context if you take it a step further and you compare the last 2 weeks looking at rejection rates, which is purple, tender lead time, which is yellow, and then the overall volume trends. So you can see that volume out of Atlanta is up 3.5%, but tender rejections are only up 2%. Another lever that shippers can pull is increasing that lead time, right? To get that freight accepted, tender it early if you think the market is beginning to tighten. So you can see that the lead time is up 2.4%, and rejections really have not.
Because they have more time.
Rejections have not gone down in that market.
I have an extra day to deal with it. I can deadhead trucks into that market.
That's right.
That's what happens in these early part of a recovery. Like, we're not in a recovery from where we were last year, but in terms of this down cycle that we've seen, you're starting to move towards that Labor Day peak. Atlanta, these big markets start to pick up because now the retailers are thinking, okay, I need to move freight from my distribution centers. Atlanta's got an enormous distribution center network out to my sort of regional points. And so we'll start to see these bigger markets pick up. They'll sort of like magnets soak up all the capacity. And then over time, that's when you start to see rates move. But they won't move until they sort of soaked up the capacity that's near them.
Yeah, that's why I thought lead times were an interesting thing to talk about today, because it is, like I mentioned, another lever that shippers can pull. We haven't seen, even with volumes being up pretty significantly in Atlanta, those spot rates aren't coming up yet.
Yeah.
And we're not seeing rejection rates rise.
But it also seems much more orderly. I think the other thing that I would take from the fact that rates are not going up, tender rejections are calming down, if you will, or have been. As you mentioned, tender lead times we've added, half a day.
Yeah, and we've added more than that in Atlanta specifically. So
I think it just means that shippers are aware and they're planning further in advance. They're trying to lean on contracted carriers and
that helps them control their
providers.
costs. Yes.
And it just tells us that this market, I would describe this market as incredibly orderly. I've used the word Goldilocks. I think every broker and every motor carrier would love to see this massive surge in rates. We're not seeing surge of rates, surge in tender projections, but the fact that we're at elevated tender projections where we were over the last couple of years, and rates are still near record highs.
Contract rates are continuing to go up.
And contract rates are going up. That's actually a really good environment. You have an orderly tightness, and I think that's a real solid thing. What we don't want to do is get so hyperbolic in terms of super high surges of rates and really strong economic conditions where it creates a massive increase in capacity. I think this actually feels a little bit more orderly and probably invites the fact that this cycle may go on longer. I mean, one of the longest cycles that we ever saw was from 2009 to 2014. That was an upcycle the entire time. That's 5 years. That went on much longer, but it was very slow.
It was 3%.
Orderly, yeah.
3%,
which is honestly
3%,
great. If
right?
you're running assets, that's a great environment. And if you're a shipper, it's predictable. Predictability is a good thing. That may be where we're at.
One last thought on tender lead times. So we have a tool in Sonar. It's really actually part of our broker toolkit, but it's Coverage Guide. If I were a shipper and I was thinking about lead times and thinking about how to manage costs as rejections change, I would absolutely be using this as an indicator. What's really cool about it is it shows you the current condition and what's happening, right? So, for example, this New Jersey outbound, tightening, currently tight, act now. I would be tendering that immediately. However, if you're looking at some of these other markets, outbound New York, outbound Pennsylvania, outbound Illinois, showing currently tight, but loosening. So I would
guidance to tell you.
Yeah, and the guidance shows you specifically that it is in words for brokers, since this is part of our broker toolkit. But there's this condition. So those where it's currently tight but loosening, if you have time before the pickup date, I would sit on them, especially if you're not going to be able to tender them at contract rates. If you think that they're going to go out at spot, and you know that market is going to be loosening, no reason to have tender lead time that's that far in advance
to cover it.
Yeah,
and I think it's important if you're a broker or someone that's a shipper, and you're thinking about, okay, I want to cover quick because this market may get tighter and harder and more expensive. This will give you the guide on what we're seeing in the data that tells us whether a market's tightening or loosening. And loosening means you can wait to the end of the day. I think what's always interesting is if you walk into a lot of brokers that are sort of inexperienced, they always take the harder ones later in the day, which is really a bad move. You want to deal with the harder ones, the tightening markets early. Yeah. Because those are the ones, the loosening guys.
If you're going to lose a little bit of money on it in the beginning of the day, you're going to lose a lot of money on it.
Rates can move 20, 30. I mean, there's times where you could see a double of the rate, like literally in a couple hours.
That's right.
As that market gets
so up. Overall takeaway is lead time is one more lever that shippers should be using. It provides more context when you're looking at what's happening in the market. And then also, it is another sort of outlet or lever that shippers can use to manage rejections and in some cases costs.
And I think the difficulty number as well right here just tells you how tight. Looks like the Dayton, New Jersey, didn't even know that New Jersey had a Dayton, to Saxonburg, Pennsylvania. Then this is somebody's, basically, they uploaded their own routing guides.
Specific loads, yeah.
Loads. And essentially that one lane is a 9 to cover. So interesting that New Jersey to Pennsylvania is a short haul. A real short lane, but it does tell you that it's tighter than it should be.
Yeah. So
360 miles. So.
That's it. Pay attention to lead time is what I would say with our Sonar update.